What's up, everybody? Dave Bartosiak here, and I've got another chart of the day because, well, there's a lot of interesting stuff happening in the market, and I want to talk about it. So, first thing I want to talk about here is Taiwan Semiconductor. You guys, I'm sure everybody's heard about NVIDIA. Everybody wants to talk NVIDIA, but what gets lost in the mix sometimes is the world's largest independent semiconductor foundry, meaning they actually make the stuff there, right? Versus just designing and marketing, these guys actually make it. And I'm putting some really bold lines here on the 50 and the 200-day moving average just so they stand out. Before even digging into charts, what do you notice? The slope on both of these, pretty nice and positive. Just underscoring a positive trend that we've seen for a while. Starting to roll over, though. Starting to tick down a little bit, and that's a theme that we've seen all over the place. Obviously, tariffs aren't helping. Not helping the broad market, not helping the semis, not helping anything. But Taiwan Semi announced they're upping their investment in the U.S. to $165 billion with a B U.S. dollars. They're going to build 5 new facilities in the great state of Arizona. That's why we've got the pop today. But what's happened recently? You get this gap down and then just selling pressure. So gaps under the 200-day, gets over, under the 50-day rather, gets back over, and then it's all dumpy from there, which has happened to a lot of different stocks. Friday, we had that bounce, and in this case, it was a bounce from underneath the 200-day moving average. Problem is, we didn't get any follow-through on Monday. In the morning, it looked good, and then things got progressively worse as we started talking tariffs. Today, we've got retaliatory tariffs from Canada, Mexico, the U.S., China, rather, and Tariff Tuesday is starting off on the bad foot, but maybe we can rally. It's midday here. Who knows what could happen here on March 4th? But what we do see is we're still within yesterday's range, and yesterday was a huge range. If you look at the S&P 500 or NASDAQ 100, it was an outside day, just like this. Well, this one wasn't, sorry. Outside day means you are past the top end of the range and past the bottom end of the range. So for example, like right now we're on an inside day because the whole range of today can be encapsulated inside yesterday's range. If that makes sense. So you had that, and now you have a little bit of a bounce. Market trying to bounce here. It's too early really to tell on the volume side of things because we're just not there yet, right? We got to wait till the end of the day to see if we can meet yesterday's volume or not. Wasn't a huge, crazy data volume like you see on the earnings reports, but still, from a technical perspective, not what we like to see because you're under that 200-day. But look at how nice the move has been. And we can draw this fib from the big move to give you some perspectives. And wouldn't you know, came down to that 38.2% retracement, and that's where the first round of buying came in. What do we got to keep an eye on now? Still that 50-day, or the 200-day in this case. 183.53 on the 200-day, so look for a retest of that should the market fail there. Definitely coming back to 172. Look out below 155 and change is the 50% retracement. And then your last sort of line in the sand before things really unwind. Should they come this way, 138.68. Now, that feels like a long way away. It's not. Okay. When you look at the move here from 226 to 176, that's already $50 lower. So to move another $40 lower, granted the percentages are different here, but still not totally out of the question should the market come under pressure. And again, this is a big if, right? If the market continues to come under pressure, these are levels of support that you need to look for. Now, to the upside, if you happen to break through that 200-day, there's 23.6 likely to come into play. But even before that, you have this previous swing low. So the January 27th low of 187.67 should provide some resistance if the stock rallies back over there. And you can see, remember, this is kind of like, it's like a building. What used to be a floor becomes a ceiling if you fall through the floor. So that's what happened, is that the February 25th action tested that January 27th low, caught a small bid, get up above this 23.6, and then fail. So you can already see that these fill levels have come into play. So this one is going to be a big one, I think, should the market push its way through that 50-day and spike back up there. Overall, in the short term, we are still very much in a downtrend. Now, a little bit of buying today, and that's some positive news, right? So the whole big thing of the tariff fear is that, oh, we're going to get all of this stuff that's taxed, it's built overseas, it's going to be a problem. Well, what happens when we start building those things stateside? That's kind of the big picture goal. In the short term, obviously, there's pain there, but the big picture goal is that you have more manufacturing here in the U.S. How does it play out? We won't know for sure, but what we do know is Taiwan Semi making a move in a positive direction here today, and we've got a couple of levels to check out to see whether or not it continues on or it comes under pressure. All right, folks, if you're here on Zacks.com, be sure to follow the author by pressing that magic button that's up around here somewhere on YouTube. Subscribe to the YouTube channel. Come back tomorrow because I'll have another chart of the day for you then. So for everybody here at Zacks, I want to say thank you, and we will see you tomorrow.